Well, I think quite simply the most recent corruption scandal has put a huge cloud over Brazil, over the rule of law in Brazil, and the credibility of corporate Brazil in general. So that's caused a lot of problems for companies that are indirectly, directly, and not even involved at all. So I think that over the next 8 to 12 months, once, for example, the first headline, the 20th headline is not is negative as the first headline, I think that that negative cloud will go dissipating, and I think Brazilian issuers will once again gain access to international capital markets, because there's a lot of really good, solidly financeable, well-run companies here in Brazil. First of all, as far as domestic funding is concerned, I think there are just a few tweaks to the structure, and I think it could be done. But as far as international financing is concerned, you've got two major problems. The first problem is FX. So all of these projects are BRL denominated cash flows, and in order for them to become structurable and attractive for international investors, there's got to be some mechanism to hedge FX risk. And right now, it's impossible to hedge FX risk given the current volatility in the market and given current rates in Brazil. The other situation is quite simply, if I can buy as an international investor, notice the Tesouro or government debt at almost 14%, I'm not going to be very compelled to look at Brazilian project finance, with a 100 and 200 basis point pickup, but requiring quite a bit of due diligence. So in short, I think what has to happen is you have to see macroeconomic stability set in Brazil, and as a result of the macroeconomic stability, you have to see rates on government debt come down significantly to where it makes sense for me, again, to look at corporate debt in local currency and some of these infrastructure projects. Because right now, as I would put it, these not only are corporations, but obviously infrastructure projects as well, they're just being crowded out of the market by the government. I think it's a great forum that brings together local corporates, local investors, and local bankers, and we get together for 2 days here and we hash out what some of the major issues and topics are. And I'm always impressed when I come to this conference. This is, I've been participating for several years now, and I'm always impressed with the level of people coming here and the feedback that I'm able to bring back to my office, and that's directly implementable in my day-to-day investment process. I think that it's not very much unlike other emerging markets that we're investing in, but the next 5 years for Brazil are going to be much more difficult than the previous 5 years. You're not going to have the benefit of the commodity supercycle, and liquidity. Liquidity in international markets is it's not going to evaporate, but it's going to be much more challenging as some of the global central banks pull away QE. So I think Brazil has got to get its house in order, quite simply, and realize the urgency of maintaining its investment grade rating, of realizing the important but sometimes difficult to swallow structural reforms to keep the economy competitive, and as well, I don't think that all the weight can be on monetary, on the monetary policy side. I don't think this economy is going anywhere with 13.25%, interest rates. There's got to be conditions where inflationary expectations improve on a sustainable basis, and as a result of that, the Brazil risk premium that's right now almost the highest among major emerging markets comes down. So I think the main message here is more challenging next 5 years relative to the last 5 years, plenty of opportunities, but there's got to be a sense of urgency.